Hello, everybody. This is Patrick MontesDeOca with Live Market Wrap for February the 10th, 2022. We had a lot of activity today. Markets were affected by the interest rate picture that we got, which indicates inflation running at about 7.7%. at a level highest since 1982. So we're looking at a lot of red on the screen. It has shaken up the markets in anticipation that interest rates are going to be going up, and potentially on this next meeting, the Feds can raise a half a point, not a quarter point, but a half a point. So once again, the fear in the marketplace is that interest rates are shooting up rather quickly. In fact, they have. And so the fear in the marketplace, the fear in the housing market is that we are beginning to see potentially the top of the real estate market as interest rates have increased tremendously over the last just couple of years. They have gone up about 300%. We're looking at a 30-year mortgage above 3%, where in 2020 was running at about 2.9%. So we have about a point so far that the market seems to be digesting in recalibrating its values based on the cost of money going up, increasing. And it's going to affect not only Main Street, Wall Street, but also it's going to affect the government in terms of the interest payments on what almost is about a $30 trillion debt. And so let me bring up here the 10-year note is above 2%, 203, up about 5.5% increase in one day. And I think we're beginning to see interest rates on the 10-year getting a little bit nervous about interest rates rising. So we have seen this tremendous increase in interest rates from what we saw back in 2020 around January was rates to be at about 0.53%. So we're trading at 2.03. Boy, you're looking at about close to a 400% increase in interest rates in the last couple of years. That's pretty rapid increase in interest rates. So we have volatility in the market, and it's beginning to cause a lot of nervousness in the debt markets. The 30-year bond is trading at about 2.32. And you can see the inversion on the 10-year note rising faster than the 30-year note. So the yield curve is inverted. And the pressure is on the 10-year note. Obviously, the pressure is building up as well on the 30-year bond here because the debt is mostly on the 30-year bond. So let me put things a little into perspective, which is really what we need to do at this point when we get this inflation number to come out today at about 7.5%. If you take a look at the inflation rate of 7.5%, which I believe is a lot higher than that, but if we just use the government numbers, you're looking at about a 5-point negative yield against the 30-year bond. And you're looking at about 5.5 negative yield on the 10-year bond to inflation. So one of the things I said earlier here that needs to happen is either interest rates are going to shut up rather quickly, or inflation has to come down to narrow that gap. The only way that the Feds can monitor the situation is by raising interest rates on a gradual basis. They can't do it all at once because they will collapse the financial markets. So the argument is whether they're going to be doing a 0.5 point or a 1/4 point on this next meeting. The anticipation of rising interest rates is what's causing massive liquidation across the board as the cost of money begins to increase. Now, here's an example of the fundamentals lagging the market, as I say always, because we probably had today one of the biggest economic news that came out regarding inflation. And the gold market came down $9 and silver closed down about 13 cents, reverting after making a new high. Let's take a look at the charts here and let's talk about real trading, because if you trade this fundamentals, the expectations automatically were that with this kind of inflation rate, the gold and the silver market expectations were that they were going to explode. The general consensus was that this was going to be, and it is, explosive for precious metals. The question is, it doesn't go when everybody wants it to go, or the expectation of the majority. So we are trading the market. And we recommended our traders this morning to take profits on any long positions in futures. And if you want to speculate the short side, we produced a short trigger this morning on this morning's show, which was essentially selling the silver at about 23.56. When it came down below the sell 2 level, we recommended to go short, and we pretty much covered this position here a little while ago and produced about $1,200 in profits. One of the things that I make a point of doing here for my trader subscribers and for you, my audience here, that I am building here in YouTube, this is a transparent methodology that essentially you can see the results in real time. I use the VCPMI myself for my trading, and I also teach and coach how to use this for individual traders. We produced about 2,900 points on trading 20 micro Bitcoin. We produced $1,200 net profit here on the short silver that we produced earlier. And I make a point of documenting all the trades that we do here, that I do essentially in real time, and we netted about $4,959 on yesterday's trade on silver, gold, and NASDAQ. So I am very active in the live trading room. Let's take a look here and see how the rest of the markets fared. On the news of the Fed's raising potentially interest rates, or the market trying to discount at least a half a point. Gold closed down $9.30 at 1827. Silver down 13.5 cents at 23.20. Copper was slightly higher. And we got some of the digital assets like GLDC, GBTC, coin down anywhere from 2 to 4 or 5%. We are hedged right now in precious metals and digital currencies as well as Bitcoin. We've locked in a really nice move in Bitcoin here from the 32,000 level. And we are looking to add to our position here in digital assets. One of the reasons why I'm getting more involved here in Bitcoin is because it has matured. This asset has matured and it's being accepted. It's in the process of acceptance by the financial community. And we're going to see and hear pretty soon about 5 countries that are adopting Bitcoin as their legal tender. And it's happening faster than you think for most people that can grasp what's happening here in the digital markets and Bitcoin. It is completely a new uncharted territory that essentially deals with technology, with virtual currencies, virtual assets in a virtual world that is synonymous to the real world. I think we're seeing a tremendous change in front of our eyes, very much like the beginning of the Industrial Revolution here in the early 1900s. I truly believe that this is just the beginning of an incredible world that is a virtual world. The meta world is a completely new dimension, but it does adhere to the physical, the technical analysis that we use in the physical world. And maybe, hopefully, through technology, we can adjust some of those deficiencies that we have seen in the physical world, such as the tremendous manipulation in the US dollar, in the financial markets, on LIBOR, interest rates, price discovery. Using blockchain technology might become the way of the future in terms of transparency. So it's a pretty exciting time, and it adheres to the variable change in price momentum indicator, which is what I'm very excited about. in using this application. We've had so far a decent week, and let's take a look and see what the markets here look to do here as we come into the Globex session here in just about 45 minutes. And so we'll pick it up from there, my friends. I hope that you had a real successful day. And any questions at all, just like and subscribe in order for us to continue to provide this tremendous product.